Okie dokie traders, what's up? Jamie Saettele here. It is September 18th, 2015. This is the Midweek Strategy webinar. We've got the IDO search webinar after this. It'll be a different webinar. Like I'll start a different webinar. It'll be a different link, but that'll be it in an hour and a half. Okay. All right. So we might as well title this webinar kind of the calm before the December snowstorm or something, because as you know, things have quieted down significantly since really the mid-October turn. Um, there hasn't been too much really to look at on a swing basis lately. It's really dominated by the fact that the dollar, and I'll say it until I'm blue in the face. It's still the dollar's still higher here. Okay. Um, it's probably getting close to the end. I mean, this is big resistance up here, and this really, to me, is kind of the biggest chart right now to look at. Um, kind of, I guess, pretty annoying when you look back in hindsight, obviously, that we we had this slope like this, and if you look back at the swing updates that were written after October 15th, we had watch list to buy dollar yen and sell euro dollar, because we had J spikes actually on the 15th, but I think there were orders, they were never triggered. In any case, at this current juncture right now, as we're looking at this, dollar is still higher, and resistance does look to be up. I would gather that it's up near this 12,300, 12,350 area. Um, the line that this from the slope, but extends and goes back. It's more or less the upper parallel from this, but it is slightly higher than that as it extends off of a number of highs. Okay, that go back really throughout the entire uptrend that we've had. I mean, we have had two big highs that occurred at the next parallel, which would be really quite a ways higher. To give you a perspective on this, if the dollar does trade up to this area of roughly 12, 350 or something, that would be like the euro trading around like 103. Okay, so the euro would be at a new low for its move, and then you'd have the potential to see, um, quite a big move in the opposite direction. Okay, in other words, a reversal. We'll get to that when the time is right. From not just this chart, but timing wise, seasonal wise, tops this week across a number of seasonal look back periods, and the commodity currencies start to turn as well. So we'll look at that and take that into consideration. Obviously, you do need to see something on the other side as far as some positive signs and price action. We could be getting to that point. Obviously, we got the Fed minutes coming out in an hour. I'm not too certain. It's still kind of drives me crazy how everyone takes so seriously the Fed minutes and everything. I get it. I actually do think they'll raise rates in December. Not sure exactly, what kind of impact that's going to have on the market at this point. It does seem to be pretty baked in at this point. It happened pretty quickly, to be quite honest. But I guess what people will be watching for is future rate increases and everything else. I think they'll probably do one. I think they'll probably not do anything in 2016, and 2017 is when things change up a little more, and you start to see potential for a bigger bond market decline, and it means rate rises for the Fed. So that's looking way too far out in advance for this, but this is a big chart. Okay, so just kind of know that. The resistance higher here in the US dollar. Now we go to a daily chart. It doesn't mean that you can't have some down ticks, right? We're just meandering here kind of at resistance in the dollar for a couple of crosses. When we zoom in here for the dollar, We actually are not at new highs yet, which is kind of interesting. Um, and faltering today, actually at the close from the NFP level, right? So you can see right here. Okay, the close from that day, the NFP level, an important day, obviously across all markets, but it is dollar centric. So, here we have, yeah, Mark asking a quick question. I'll talk a little bit more about this Fed stuff in a second, but from the technical standpoint, we can spend some time, okay, ranging here, and this is where a trade setup would come in, right? So we can spend some time ranging and forming, more of a short-term coil to go higher from, right? So at the end of the day, what we're looking at is a pullback that stopped right at support, okay? Um, we are at resistance within this range, which is, a relatively small range, right? 1, 2, 3, 4, 5, 8-day range here so far from NFPs. What you can imagine, we could still pull back. Things could get even quieter, okay, believe it or not, before we decide to go higher. So you could see something like an A, B, C, D. You could get a triangle and kind of see supports on this line before we, move into higher levels. We could go straight up into this line. I think those are the two options at this point. So I think it's higher for the dollar, but again, you can see a little bit of fight, if you will, on the other side at this point. And I think the euro probably actually highlights that the best. So here's the euro daily chart. And, again, the golden line, although it looks more yellow on this computer to me, but the golden line ended up being really quite perfect resistance on, I guess that was, what was that, Thursday, and the market pulled back. We had a short-term bullish structure that actually held into Friday, and then the market actually turned up. Like the last couple hours of trading on Friday was interesting to see. We had like a 40 or 50 pip move on the upside on Friday afternoon. It was kind of odd. And then, of course, just the tragic, dreadful. I just can't make sense of stuff like this in humanity. But I don't even want to call these people humans. But what happened in Paris? Obviously there was a knee-jerk reaction. The gap down on Sunday. The market came back, actually missed filling the gap by like 1 or 2 ticks, and then continued lower. Really, not that much, not that changed with the on the week here. And what's interesting, you look at I like to keep, as you know, I like to keep my 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 levels in front of me all day. So 106.24.59, right? We had that marked down, and I'm like, well, what the hell is 106.24? Because I didn't really remember there was anything there. And I look at the chart, and oh, there it is. It's that low from April 16th right there. Funny enough, that is the low right now today. 106.20. It's obviously you can't say that that's any sort of a low. You have no freaking idea. Okay, but just if you're a really short-term active trader, sometimes it can help to keep these levels in front of you. So like when you see price printing, it's like you're kind of, look when we traded into that, for example. Here's dollar CAD. I'll get to that in a second. But we could see what was happening. We were plunging into this thing right at the London close, right? And if there's going to be a turn in the market, even a short-term one, and short-term in this case, you could go up to 107.35, which, it's 100 pips on the upside from here, in line with what I was just talking about with the dollar, potentially ranging a little bit before we go higher. And anyway, time and price, right? So we've got the levels, and these levels are based, usually they're going to be based on some sort of a high or low, some sort of a volume price level, a month open or a week open. Like in this case, you can see 106.24. That was this level here. Okay, so these are all mapped out in advance, obviously. But you don't want to be sitting there doing analysis like while you're trying to figure out whether to buy or sell. But 107.35, that's the weekly open price. I was hoping we'd get in there yesterday because that'd be a great place to sell it. But in any case, you can see when the market comes into there, if you're looking at a chart, you know what time it is. Say it's a London close or the European close, so noon in New York or 11:30 a.m. in New York, and the market starts to come off, and you kind of get that capitulation into it. It's like, oh well, it's a good place for a bounce or a turn, right? And sure enough, we have gotten that. I would not be surprised at all to see a bigger move higher, 107.35. Again, it's the exact same thing I was talking about with US dollar and it getting pulled back and making more of a coil before we try to go up to those levels, right? So let's try to reverse predict what's going to happen today, right? So what we'll say is we will say that you get the Fed minutes come out and they're dovish, or more dovish than people think they should be, and the dollar sells off and into support. In other words, euro rallies into resistance at 107.35. Dollar Swiss comes off into support at 100.60s. Dollar yen comes into support at 122.75. Whatever. Dollar CAD comes into support at 132.40. And then everyone's like really bearish the dollar, but then it turns around and rallies anyway. That's going to be my prediction, my guess. Okay, so that's what I'm thinking could or will happen with these things. And there's the euro. So the euro has the best looking shot, in my opinion, as far as some sort of a bounce, if you will, or a counter dollar move, as does dollar CAD. We'll get to that. Okay, let's move on real quick. I will definitely look at pound Raj. Don't worry. Let's look at dollar Swiss. Hold on here. Dollar Swiss, wrong chart. Okay, so I have it on this feed. All right, so dollar Swiss, funny enough, has actually come into daily reversal resistance. And we did go a little bit above it, right? We went to 102.17, I think, today at one point. Yeah, 102.17. But Craig has a good question about seasonals for Euro commodities. I will definitely take a peek there for you, Craig, in a sec. Just want to finish some of the dollar stuff here and get that front and center in your minds because, again, we do have minutes here today and kind of pressing the issue on some of these dollar crawl. I think it's time for a dollar dip, but maybe not the top. So here we are with dollar Swiss, and this is a breakout, folks. Okay, again, this is a breakout. I know that it's sexy to get the big turn, and that's where my eye is. And yesterday's comment about going cautiously with the crowd but being prepared to go boldly against it, I can't stress that enough. Okay, because your big money is going to be made on the turn typically, or at least in my experience. That's what's gonna do it for you. You get this kind of capitulation into trends. That's fine. Don't necessarily want to be fighting it the whole way, though. There is a time to fight it, and it's when you're at resistance. And bottom line, let's make it simple. The dollar index resistance is a little higher. Okay, if it turns down and starts breaking some support, then sure, we will look to turn bearish and try to do it as quick as possible, but without hurrying things up and screwing it up too much. But the trend is higher right now, and dollar index, as we just looked at this chart, this is from 2 days ago, is still up here. Anyway, dollar Swiss. When someone tells me, man, dollar Swiss, this is huge resistance, show them this chart weekly. This is log chart. We broke resistance here. Okay. monthly chart, you could have a long ways to go. Dollar Swiss has been going down forever, literally forever. Okay, and if there's a massive devaluation process going on in Swiss francs, which might be the case, we could be at 110, 120 before, sooner than people think. All right. Um, so with that in mind, again, the question is, where's the risk? To me, the risk is this low, 99.88. Okay. That doesn't mean you turn bullish at resistance, though, right? You want to buy supports, and that's why I've been advocating in leaving entries at this level 10066. Okay, there's a lot there horizontally and slope wise. Okay, you've got the median line, really precise resistance. Okay, turned up, traded around the median line, kind of annoying because I wanted to get long on. The idea was to get long on this NFP pullback and look to put orders at 99.10 or something, 99.05, which was the former high, as well as a sliding parallel. We didn't get that. That's okay. We're prepared to go long on any sort of dip here. So not only do we have the median line here, we also have the short-term trend line, which goes off of lows so far in November. So you can kind of call it the November trend line. September 2nd low, September 12th low. Looking for that support. Basically today would probably be the best day for it. Again, if you get kind of a disappointing, if you will, Fed minutes for the dollar, I'm sure there will be a lot of people quickly liquidating this trade, given that it's more than likely pretty crowded. And we have something up here anyway. We've got the daily reversal level at 100 or 101.85, I believe. So that's where we're looking with dollar Swiss. Okay, dollar Swiss probably one of the better looking trend breakout things going on right now, and just a pretty clean looking support for entry at this point as well. So still like that, still like leaving an order there even with Fed minutes. Okay, because again, your target and pullbacks along the way, great, look to buy those, but your target for this is going to be up at the upper parallel. Okay, from this structure, which was support. Not the best looking support. We traded around it for a while, but it was support. And median line, lots of good trading around that. Resistance at one point, looking for it to be support, upper parallel. That's going to be at least 104 plus at some point, and could be, could be higher, obviously, if it gets there at a later date, because it goes up every day. So there we are with dollar Swiss. Pound dollar, we go to this one. I know that there's most of you probably are like, what the hell's wrong with this thing? What's it doing? I ask myself that as well. Again, not much to say here. This is resistance. I know that this totally goes against the idea of a US dollar pullback. So maybe we blow through this thing, or maybe the dollar doesn't pull back. But I'm just going on each chart on its own merits here. And, not only do we have, this is probably the best looking one as far as just what resistance is from. You've got 152.40 horizontal level, of course, right? 1029 low, but this trend line, okay, which was sold into hard, broke from, that has been really precise as resistance now for several days here in September. Okay, now if we look at the analog we're following, which has still been, again, pretty much pretty on point, I guess you'd say. Okay. Oh, this is the S&P 500. By the way, S&P 500 analog suggests that we come into a top today at about 2070 or so. So like 4 more points. We'll look at that. But here's the pound. So the top date actually was so far the top. Hasn't been much of a top, right? We've actually pulled back. I guess from high to low, we pulled back 100 pips, but closing basis, not a whole lot happened. This is actually the bottoming date today, so there is the risk of us going higher. The next sell date on this for the bigger move lower is 11/25, And the implication there would probably be that pound is up somewhere at these resistance, maybe all the way up 154. I don't know. We got 53.30 as short-term resistance potentially, but then 154. Bottom line, if it stops out, the stop's lowered at this point to the high from Monday or from Friday. So if it stops out at 52 above that high, 5270, 5265 high, 5270 stop, then that's, super and great, and, whatever. We'll move on and maybe have a better sell, next week on the 25th, which would actually be next Wednesday. And that would be 154. So yeah, the whole strategy here was to get short 150, 115, which we did on the breakdown, looking for the big move. Ended up being basically selling close to a low. But at least risk has been minimized at this point. It was a very small position, and I guess it could still work out, but I'm not going to hold my breath. Okay, so pound dollar, if we go above here, 52.70, we're above this old trendline support, which has been resistance. At that point, I wouldn't get too, jacked up about the short side up until probably closer to this trend line here, 54 or maybe even higher. We'll see. All right. So that's that. And I think probably your best thing to do, your best bet as well, is probably going to be to watch the dollar index, right? Dollar index. That's going to be your best bet, in my opinion, because this is clean. Dollar Swiss is clean. Pound dollar was clean, and then it went dirty. Euro dollar, a little cleaner with the levels at least. 107.35 biggie. Okay. All right. So let's move on. Let's look at dollar CAD. Because I actually put out a short today on that, and it is a little bit underwater. It's where are we at? 33.52. I'm short. Probably too much at this point. Here's dollar CAD. Okay, so we've talked about, and I've tried to kind of wait as long as possible, right? Like crying uncle, if you will, on the whole, waiting for this short position, because I've wanted to kind of be short dollar CAD for a little bit, based on several things, but the price action dollar CAD, which is the most important thing, obviously, and also the crude oil ordeal, which everyone's probably familiar with at this point. It's been just going to hell. So dollar CAD, you remember this support we had back in September, which was a day after the Fed day, by the way. It's also interesting to note with the Fed minutes coming up, just kind of how markets have traded around Fed releases recently. This isn't a Fed, day. This is just the minutes coming up. But in any case, don't forget we had that dip on the September Fed meeting, and then we had a rip, and then the thing absolutely plummeted the next day, and then it went higher. So it was like a quadruple, there was no such thing as fade the initial reaction and then hold on to it, you're good. There was an initial reaction and then a fake out and then continued lower, and everyone got bearish on that, but we came to slope support and then went higher again and went to trend highs, then collapsed. I mean, it's been pretty wild. So as far as looking at dollar CAD, yeah, we don't have any slope here on the downside. Okay, we just don't. I am short anyway. Because there is horizontal stuff up here. Again, you've got high in August, which is 33.52. We're basically trading at it right now as I speak. You've sold off from here before, okay? The high is actually right at the the 929 low. So in other words, when we were coming into the bigger high, this level was support on a spike into that high. So it's an interesting spot to know, in my opinion, and in the market's opinion. It actually is the high tick right now. So I'll take you through the anatomy of why I went short where I went short today. So again, we have upslope. Okay, I've highlighted the fact that over the last number of days, really kind of started highlighting it here on like the 12th. So that was like almost a week ago. And we kept getting this divergence with momentum on a 4-hour chart. And I'll take you to that chart real quick. So here's the 4-hour chart. Here's the divergence with momentum. It really started here, right? You go back in the archives, the swing update, and you can see that. And as I've said before, and as I said in the update, I don't like pointing out divergences on intraday charts. They just usually don't work, okay? This was a little different. I'd point this out because it's not like it's a divergence for the sake of divergence. It's divergence, and we have the crude oil stuff that I'm about to talk about, and we have the slope, and we have these horizontal levels over here, okay? So once we saw this, I was like, okay, this is cool, and we started seeing some reversal bars. I'm like, dollar CAD's primed to go a little lower. Well, it kept pushing to new highs, pushing to new highs, pushing to new highs. And in fact, we actually have another divergence now. We didn't go to a new high, but we went to a new high on a closing basis, which is all the divergence cares about. RSI doesn't know that there is a high or a low tick. It just knows the close price. You can see these little red dots. Those are like little divergent sell signals, okay? So we've been getting them on each little high. Now, again, this is still up as far as an uptrend, but you can trade down from resistance, okay? Even uptrend resistance. And if you get down to support, it's probably down near 32, 40, 50 or something like that. And so I'd be potentially actually looking on a decline down to here to flip to the long side, okay? Now I'm going to zoom in a little bit. So this line has been one that's provided a lot of good trades throughout this slope, okay? It's been a very profitable line on the chart, if you will. And what we're going to do is zoom into it. So once we came in and it was support again, we started breaking it. It really hadn't been that useful, okay? We traded around it. Things have been really sloppy basically for the last week, okay? Zoom in even more. I'm gonna go to like a 15-minute chart. 15-minute chart. So this morning we came in and I'm like, this thing was resistance yesterday morning throughout the US session. And then it was resistance again, like all morning long. Okay, you can see all the wicks here. I think I mentioned it on Twitter. You can see all the wicks on the 15-minute chart. So I was, kind of the mind, well, you've got all these wicks, showing selling up here. Maybe this thing's really back in play, for a nice move down into support, which is 32.40, I think. And that's why I put the sell out. Okay, now that didn't end up holding, but you know what? This trade still might work because we are giving it room up to above the new high, or the old high, or the recent high, whatever. All right, so we'll see how things come out with FOMC, whatever. We are seeing a little bit of dollar resistance here over the last hour or so. Well, since London closed, dollar, is kind of fading a little bit. So we'll see if we end up getting, reaction up here, okay, with dollar CAD. The other part of this story, of course, is U.S. oil, aka crude oil. All right, so crude has been obviously slaughtered for some time. And, we've had, the head and shoulders, I should say. This is continuation head and shoulders. All right, this has been completed and it is a pattern and it is valid and it does have a target of 50 or sorry, 35.50. It's down here. Okay. My guess is that if we get down there, crude goes a little lower. But whatever. That's the target from the Head and Shoulders target. Okay, so that's what we're looking at on a bigger picture. However, we are at support on downtrend support, and as I mentioned in the note the other day, it's like crude all day on TV about it getting pummeled, and I kind of think that we're at a point then that we can get a rip, and we did get a rip 2 days ago. Of course, we're right back at the lows, but still, resistance for this thing is still higher. It's like 43, mid 43s, 43.20, 43.57 area, and it's a good time to show a crude chart, I think, because if I go to a really short-term chart, like here, it was showing this one earlier, but if we go to a really short-term chart, here's a trend line. And you can see it. We have actually traded into, literally perfectly into it this morning on that sell-off. So crude inventories came out, and it was weird. Crude actually didn't really do a whole lot on the inventories. This was when they came out. You actually had a spike higher, a spike lower, and then it rallied. I thought it was going to take off on the upside. But then after that, like starting it at right, about 30 minutes after the inventories, the market just came off really hard. And we came off into the low, and we're at this level too. So again, we could bounce here. We are bouncing, but we could continue to bounce. And that's another consideration, obviously, with dollar CAD. I guess it's a good sign, you could say, that dollar CAD hasn't traded to fresh highs, and even though crude has traded to fresh lows. So we shall see. But in any case, you do have that going for you as far as crude is concerned and dollar CAD. Raj with a question here saying, it's been hard trading. Jamie, has trading been hard for you this year personally compared to other years? There's no trend, all choppiness, no follow. Well, Raj, I'll let you in on a little thing. Trading is always hard. It's never easy. That's just the truth, okay? And yeah, you're going to have months and months and months and maybe even a year where you don't make money, okay? Luckily, we had a really good January and good first quarter, and we could still have a really good December, right? We could still have a really good November. November's not over either. So, just stick with your program and with what you do, and things will work out over the long term. I mean, trading's never easy though. If you're expecting it to be easy, it's in for a rough ride because it's just not. I can't really say it any other way. Okay. All right, let's take a look at some other pairs. There were some questions I will get to as well. There was a question about Euro commodity crosses like Euro Aussie from Craig, and I definitely want to look at that, about thoughts on seasonality. There's also a question from or a comment from Mark on the rate stuff, and I'll just kind of touch on that maybe towards the end. So while we're at it, let's go to some seasonality charts. Here's the dollar seasonality, okay? As you can see, it didn't work for most of the year. And funny enough, wrote back in September, early September, that once you ignore something or dismiss something, that's when it usually tends to start working. Well, sure enough, it started working in September. Seasonal high point came in for the dollar, the week of September 4th. We ended up getting a low the week of October 15th, which is the seasonal low point. You can see all these things bottoming, okay? We ripped higher, and here we are. And the next seasonal high point is actually this week, all right? So it's this week for 15-year. It's this week for 10-year, but it's kind of minor. You can see it's like a dip, and then the bigger one is actually the week of 12.4. But it's also this week for 20-year and 30-year. And then, of course, the 5-year, which the dollar's been in a bull trend for 5 years. So the 5-year goes up until basically almost the end of the year, December 18th. Point is, if the dollar is going to reverse, one, I think it reverses up at that upper parallel that we have showed on the weekly chart in US dollar. But two, this is the time window starting now, and I know that you probably want a little closed, smaller window, but it just doesn't work that way. But this is the window where we could start actually, thinking about it happening, okay, this week, but as late as December 18th. So point is, don't look at this chart and like start going massively short the US dollar. That's just rarely going to work like that, but we are coming into the seasonal turning point, okay, for the dollar. Some of the other interesting crosses, Aussie, okay, has a turn up, although it's fairly minor in its scope or its significance. Dollar yen seasonality really is kind of bullish, like bearish yen, I should say, for the rest of the year, okay, across all time frames. So I would lean towards buying any dips in dollar yen and maybe even other yen crosses, such as the Aussie yen. We're looking at Aussie yen as a setup is, going into right now. You can see it. We're looking at, I think the price is 87. It's like 87, basically. We're 87.45. So 87-ish is where we're looking at support for Aussie yen. Euro Aussie, that was a question. I think I have enough data for that. I do. And Euro Aussie is actually bullish up, but it's turned bullish 2 weeks ago, just like Euro Yen did. And it's bullish going into really the 3rd to 4th week of December. So, there is a case to be made from a seasonal standpoint here for a turn higher in the euro. You can see here euro seasonals this week, just like it's the opposite of dollar. Okay, so we do have potential for, again, broader dollar downturn, broader euro rally. My thing is, in order for that to happen, or in order to get dollar bearish, I do want to see, what I said at the beginning of the webinar. This is support, and we held it on the pullback after NFPs, okay? Small range can take place, but in order to get bearish, I do need to see a break of this line, okay? Until then, quite difficult, other than trades putting on individually, like dollar CAD, for example, but quite difficult to just be outright say I'm bearish the dollar or whatever, okay? And for the euro, other than scalping off like these levels that I, give out, like 106.24, and, there's not a whole lot for me to go out and say, well, hell yeah, go long euros. So that's what we're looking at there. So there's the seasonal components, okay? I think the big takeaway for me for these seasonals, they have been working fairly well recently. It doesn't mean they will continue to work, but would pay attention to it, especially when price starts to do things that might confirm that something on a seasonal turning, point is happening. But dollar yen probably the most interesting to me because it's pretty cut and clear here, folks. Like dollar yen seasonal low point ended up coming in, pretty close to when it should have. It's actually a little early. The price turn mid October typically comes in like a week after that or early November. But we are in a bullish period for yen crosses going up into the end of the year. Here's Aussie yen, for example. Okay, it's followed it fairly well at times. It's fairly well, sometimes being an understatement. You've had some pretty good turns, okay, with this thing, including September 4th. So Aussie yen, like it higher, as per the chart shown last night, watching for 87 support. Okay, Craig asking a little bit more about Euro Aussie. You got it, my man. So Euro Aussie, let's see here. Euro Aussie slope that we have been looking at. Yeah, so we've been looking at this one. We're still within this downtrender, if you will. Interesting action today, I guess. There is resistance still up here. What's that? 52, more or less. Okay, again, this is just a pitchfork actually drawn off the extreme high. Those usually don't work all that great, but did work today. And you are getting a little bit of a bounce today. But for me, what I would watch for, Craig, if you're looking for a low in Euro Aussie, one, just going on this is still resistance up here near 52, okay? Where I would be thinking about more of support is 47.90 is the 61.8 retracement of the rally that you've had this year. So from April to August, okay? You do have a median line there, and it intersects it really, towards the beginning of next week. Okay, so you could see something there around 47.90. Also, here's the weekly chart. This is the line 47.90 that intersects. This is an old original slope going back to 2012. Okay, and the pivots that we had back then at that point. And the upper parallel from that really wasn't in play for a while, but it was over here. In fact, it was support for like 4 or 5 weeks in 2014 before we really took off on the upside, and that was during the same exact time of year. In fact, this is the week of 11/24/2014. This is 1 year ago today, basically. Okay, so interestingly, we could get down into the same exact spot around the same time of year. Okay, 1 year later. So that's where I would kind of be focusing my attention for Euro Aussie. Okay, is 147.90, but that's the 61.8, but it's probably even more about this slope, especially with the timing consideration from the seasonal aspect, right? So that's what I'd be kind of focusing on, Craig, and everyone else out there, right? Euro Aussie. Now, obviously, Euro Aussie on the upside would suggest a weaker Aussie relative to Euro, but probably just a weaker Aussie at this point. So let's take a look at Aussie Dollar, because Aussie on the short-term basis actually is looking pretty good. Like right now, tweeted out earlier, right when we were here, 70.70. We actually bottomed at 70.72, but that was support. This is lower parallel support. Okay, right here. Don't need that on Aussie Dollar. Okay, we could go higher here in Aussie Dollar right now. Resistance is still up at 71.80 or so. Okay, but Aussie making hay here. 71.14 is the month open. I'm looking higher in Aussie right now. I'm not long Aussie. I'm actually short dollar CAD. But the Aussie picture, and same thing with gold getting smoked to oblivion. You could get a rally in gold, maybe a little lower in gold. 20, I think I pointed out 50 as a level in a video the other day. But we're looking at Aussie dollar here, same story more or less, with dollar CAD and commodities and oil and gold maybe getting a boost here, even if it's counter trend and lasts for 1 or 2 days. Those can be fairly strong short-term moves, though. Those counter trend moves can, they can be profitable if you really have to have timing on it, though. So we're there now. Okay, I mean, if we're gonna try to go higher in Aussie and lower in dollar CAD, both charts kind of suggest that if there's going to be some sort of reprieve, then this is where we should be looking right now. So that's where we are with Aussie dollar. What else did I want to look at? How about that Aussie yen setup? I really do like it. Again, 4-hour chart. This is the one that was published last night. You can see that comes in a little bit over here. I guess that's more like tomorrow. Okay, most of tomorrow is where you get 87. But I mean, you have this uptrend going on here, right? And you've got like a triple confluence of median line. Okay, real solid, precise support at times over there. Okay, you got it here, 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 right? So a dip and then a rip. Okay, so like we just looked at these three Aussie crosses: Aussie dollar, Euro Aussie, Aussie yen. Euro Aussie still in a downtrend, and we've got the big support at 47.90, right? Suggests a stronger Aussie up until that point, and then we could possibly turn. Aussie yen support very close to where we are. You know, if we don't get there, we could just go higher. But point is, we're looking higher here, or it's set up for higher. Okay, so suggests same thing really as Euro Aussie. Okay, would be looking at this upper parallel, which is 89.50s, depending on when or if you get there. If we look at a little longer term Aussie yen picture, here's a weekly chart. What if we could end up getting, put another parallel over here and see where that comes in. We're breaking through this one. The next one's up here, similar spot, 89.50, so that would be in line with the parallel that we just talked about. Okay, that would be right here. So look at that one. That's really good, actually. That puts us up around here. Okay, should move this little circle over here. So Aussie looking like it could get a boost here, and when we look at the short-term chart, that's also exactly what we see. Seasonals are positive for a couple weeks. Nothing significant, but could still be worthwhile for sure. That is pretty much what I wanted to talk about. There were a couple questions. So one reason why I wanted to, kind of talk about this for a sec. One reason why, and then I'm going to go because I get ready for Fed minutes. But talked about the December rate meeting, right? So, okay, Fed meeting in December. One reason that they probably end up, if you got to watch the 2-year yield chart, okay? And I don't know if I can actually find that on TradingView. Let's see if we can. 2-year, 2 index. I don't think there really is anything. Anyway, if you follow the 2-year yield, typically, historically, the Fed has actually raised rates once the 2-year yield gets above, gets 100 basis points above the effective Fed funds rate, okay, or the Fed funds rate. So, like, right, we're basically there right now. Okay, the 2-year yield's been breaking out to the upside. So, in that sense, we're looking at completely objective market data. We're letting the market tell us when the Fed's going to raise rates. So, in that sense, the Fed really does follow the market. Okay, they follow the market for rates. There is a market for interest rates. It's been subdued and basically, hijacked by the Federal Reserve. But even now, in that case, we still end up, finding useful following short-term U.S. Treasury markets, following, the yield on 2-year paper, and understanding that historically, once we've gotten the spread between the 2-year and the Fed funds, that we have seen the Fed start raising rates. Okay, so that is really kind of like the most important thing I think to look at is what's the yield on short-term rates. And right now it is ticking higher, and it's at a point where it suggests the Fed will raise rates. In fact, we just broke a downtrend in 2-year rates. All right. We up near the highs seen back in like 2011, but we just broke a downtrend. So that's an important, I think, point to make. After that, I'm not going to speculate. I just, don't think it's wise to at this point, and we'll start looking at things after December once we get to the new year. But that's the deal with 2-year rates. Something else to think about. We've got Okay, here you go. This is a chart of gold, the black line. The orange line is actually the Fed funds rate. Okay, so what's interesting about this, of course, is that everyone says, well, the Fed starts raising rates, it's going to kill gold. Gold's been getting killed for like 5 years, and or for 4 years, and the Fed has not been raising rates. Okay, so it actually could be quite the opposite situation. The Fed starts to raise rates, you might actually see gold bottom. And if you think about it, it actually makes quite perfect sense. Okay, when metals, and this is a precious metal, but when commodities in general start to bottom, that means that you basically have the the market seeing bottoming out of a industrial recession or something. Okay, things are getting better, commodities are going up, they see brighter days ahead. Interest rates going up is the same thing, right? Interest rates go lower because there's no demand for money, there's no demand for credit, whatever. It's the same exact thing with metals and with commodities. So they really more or less move together, especially at turns, more than people think. If you look back with prior interest rate cycles when we've bottomed, when did we bottom in interest rates? Back in the early 90s. Gold bottomed also. When we bottomed out in interest rates in after the tech bubble, okay, gold bottomed also. Okay, gold was a little ahead of that move, but same exact thing, same idea. Okay, if you look back, to the 70s, when interest rates were soaring, gold was soaring too, and they actually moved together very closely. All right, so don't think that when the Fed starts raising rates, it's going to kill gold. Gold's already getting killed. Okay, and them raising rates is just them telling you that they see growth and blah blah blah, and we're at a point where interest rates need to be higher. Well, gold's going to rally for the same reason. All right, so I'm going to leave it on that. Actually, I'll just leave it on this. I'll leave it on this. This is the US dollar. This is the most important chart right now in my opinion. This is support, 12,150 area, high from back here in March, and the slope, of course, and this is resistance, and that resistance, of course, goes back a really long ways. It's basically called, if you will, more or less every important top in the US dollar going back since the uptrend started, or since we bottomed all the way back in 2011. Is there potential for a complete blow-off in which we go all the way to the next line? Yes, I guess there is, but my focus is on the next area of resistance, which is up here, okay? And it's like 12,300s. All right, so let that guide you in your trading. I'm going to try to let it do that for me and my analysis that I share with you guys, okay? So that's all for today. Again, we'll be back in 30 minutes with the, or 40 minutes, I guess, with the IDO search webinar. And we'll put that link out, all right? Okay, so that's it for right now. And good luck here with FOMC, or Fed minutes, I should say. And talk to you guys later. All right, bye.